Hello, guys. This is Thomas from FINEIGHT, and we are back with another recap. So, yesterday I only took one trade. It was in VTIQ acquisition, ticker VTIQ. So, what was my play here? Looking at the daily, you will see that this is not your typical trade, or rather, uh, you would really like to see a more orderly chart and not this huge climactic move. However, the climactic move had already happened. It pulled back to roughly 50% retracement, give or take, and started to climb up slowly, more slowly than previously. So this leg right there is not anymore climactic. And we see two consolidations there. And so seeing as the market was going to open somewhere really close to the top, so above 30, uh, I put VTIQ into my watch list with the long idea, possibly going to somewhere around here 32, 32, 50, 60, give or take. So if we look at the right side of the screen, we will see the 2-minute chart, which I use to enter most of the time. And you can see that the market gapped to 30.27, went straight up 1 point, then there was a red engulfing bar, then again green. So this was a really chaotic movement, typical for open, and especially on Monday after this gap. This is really a standard that you will expect, but generally do not want to trade. And now the question was, which way will the market go? So the bias was to the long side, but we need confirmation. And when the market put a higher low and was started to consolidate just below 31 and form something similar to cup and handle. So your typical cup and handle is a large cup and a smaller handle. In this case, this was like a V-shaped cup, and there you have your handle. It's really, the graphical patterns are not something to be exact each time. It just tells you the idea behind the pattern comes from some kind of psychology and what is likely happening in the market. So you have to think about the patterns in this way. Also a really nice doji slash pin bar type of candle just before the entry, and so I put my stop limit order above 31. Bear in mind, this is a really somewhat spready stock with a bigger than usual range, so the spread at that time was around 10 cents. So I gave it a little bit more room to fill my order than I give to less spready stock, of course. And so I was filled at 31.10, and my stop loss went above the swing low. Now, keep in mind that I could have used the 30.5 stop loss, but with a spread of roughly 10 cents, it wasn't a good idea for me to have only half a dollar stop loss, because I already entered 10 cents late, and with another 10 cents added to my stop loss as a slippage, the the risk to reward wouldn't just play right. So I decided to go with the wider stop, which would potentially be stopped at the 50, which was the VWAP at that time, and also the 21 moving average. So I was actually ready to exit somewhere in this area if I saw uh, the stock would going to fall. And it went just nicely. And now we have to change to SPY 2 minute chart because that's why I chose to exit a little bit earlier. So let's see. Okay. So um, I decided to exit with some of the shares at just before uh, 32, given that the S&P was at that time consolidating and then engulfing over and over again. So, and the market has really the stock, I mean, the VTIQ has already done a pretty decent movement. So I decided to lock up some of my profit at 32. So couple of cents before 32, of course. Then my original profit was somewhere about 32, 60, 70, give or take. But I decided to put it closer to 32.50 again. This was in the same region, and it was this candle. So if you look at the corresponding bar at the left with the SPY, you will see that the SPY was knocking at the door of the previous swing high, uh, potentially forming a double top. And in general, it was very unstable at that time. So I decided to uh, basically cash in what the stock was going to offer me and just be done with it. So the remainder of the position was closed at 32.50, giving me the total for this trade of 1.37% instead of my ideal +2. So is it less? Yes. Was I then glad I exited earlier? Well, not really, because this stock went as far as 33.30. So I basically robbed myself, right? Well, actually, you must keep in mind all the times that cashing out earlier, especially when the S&P is behaving different than that you would need to. Uh, Many times this will save you money. So you then have to keep a trading journal where you will track your managed trades and also the unmanaged trades. And after several hundred of trades in your trading journal, only then you can judge if actively managing your trades uh, is or isn't better. So that's how I played yesterday. Uh, Nice, relatively quick trade after a longer time with a profit. So tell me how you guys did. And of course, looking forward to today's session, and we'll see you after it.